What's up, everybody? Welcome to Debunking 8 Broker Myths You Have Been Lied to. So in this video, I'm going to go over 8 broker myths that are being said, sold, and preached to you, and you as the consumer are being tricked or misled by it. Now, you could be a consumer that's already heard some of these statements. I'm going to go over 8 slimy broker tactics. Now, what is a broker, in case you don't know? Brokers are the ones that you're working with to help you get funding for your business, whether it's startup or established business financing. You work with a broker similar to a mortgage officer. But in the finance industry, when it comes to startup and business loans, most of us are called brokers. My name is Ashley Gunther. I run a brokerage called the Lone Wolf. And with these 8 examples that I'm going to go over with you today, we use 0 of these. In fact, when I first started in the industry, one of my mentors actually suggested a few of these as proper and effective strategies to get clients to sign off on loans or advances. So these slimy tactics, these statements that are being said to you are not correct. They're misleading, and they're really only used so they can make a sale and get paid commission. If you are working with someone in the past, if you're working with someone currently, or if as you start to explore your funding options, you come across brokers that utilize these statements, run. Don't walk, run. And if you are looking for a respected brokerage that can help you with your startup or business funding, I would love the opportunity for our brokerage, the Lone Wolf, to help you. Now let's get into the information. So the number one myth, not necessarily in order, but one of the biggest things you're going to hear from brokers is we will get you more funds in a few weeks. Now let's first talk about why a broker would be saying this. Now, you are going to hear this statement if the broker you are working with has offers on the table for you, presented those offers, and it's not enough money. As an example, let's say you come, you're looking for $50,000, right, as a business, and you get approved for $35,000. If you're working with a slimy broker, they're going to utilize this statement: we will get you more funds in a few weeks. Now, they're utilizing the thought process of something called a renewal. So when you get a merchant cash advance, an MCA, when you're between 40 and 65% paid on that advance, the company, the MCA lender, will offer a renewal, meaning they will offer you more money. So oftentimes when a broker is saying, hey, we'll help you get more funds in a few weeks, they're talking about this renewal possibility. But the truth is, this won't happen in a few weeks. Now, let's say that the broker isn't talking about a renewal program at all. What if the broker is actually saying, listen, I'm going to get you funding now, and we're going to get you more here in a minute? This can be a lie or a deceitful statement about 9 times out of 10. I'm going to explain when it's not correct, and then here in a minute, I'm going to explain when it is correct. So when it's not correct is, as an example, if your broker is getting you a merchant cash advance, let's say for $35,000, and they say they can get you $50K or more later on, that is a complete lie. Just like when we take out personal loans, or just like when we get credit cards, every time we go and get another approval, we tend to get a lesser amount. That's because every time we get funding, it either applies and utilizes it. It either applies to our utilization or our debt to income ratio. Businesses have debt to income ratios as well. So if you were to get a $35,000 advance, it will be impossible for that broker to get you a $50,000 advance in a few weeks because you already have that $35,000 advance. The likelihood of a broker being able to get you more funding is so low unless they are utilizing a different program. So if someone got you a merchant cash advance, it is possible to get you more funding, let's say in an SBA loan, in 6 to 8 weeks. That's more of used when that situation is occurring. The broker is using the MCA or the lending product as a bridge loan. If your broker is working with you with bridge financing, this is not an incorrect statement or a myth. Now, if they are talking about using this as a bridge loan or bridge funding, it still does not mean they can get you funding in a few weeks. Again, every time you get money, you take money out, it's going to lower the available approval in the future. So if you get 35K now, you'll most likely not be able to get 35K in a few weeks, maybe 17K, maybe 10K, maybe 5K. Now, again, if it's a different program completely, then it's possible for the broker to get you more money. But then this is my question. Why didn't they get you more money in the first place? So if you're working with a slimy broker and they're utilizing this, ask them where do they plan on getting you these other funds? But ultimately ask them, why can't you get me more funds now? Why do I have to sign off on this one and then wait for a few weeks? Keep that in mind. That is a very powerful statement. Now let's go on to number two. Number two, when a broker says, once you take this MCA, we will get you a line of credit. Now, this is completely incorrect. And it's completely incorrect all the time because, and this is going to be slightly technical, but I'll explain it in a way that matters. When you're getting funding out, let's say a merchant cash advance or an SBA loan, they're going to take something called the first position. The first position means I'm the first one that gets to get my money from you. As an example, let's say you have three of these. Someone has the first position, the second position, and the third position, right? The first position, let's say that you default on that first, and then you default on the second, and then you default on the third, which is typically what happens if you have three advances out, right? So if you default on the first, and then the second, and then the third, the third lender is the last one to try to get their funds from you. The first lender has the first opportunity when it comes to the bank account, when it comes to assets, and when it comes to suing the client. Then the second, then the third. So these positions matter. So if you have a first position MCA, you cannot get a line of credit because a line of credit, a true business line of credit, requires first position. So if you are working with a broker saying, hey, take this MCA out, and here in a few days, we'll get you a line of credit, they either don't know what they're doing because they're an amateur and they've never done it before, or they're completely trying to trick you into signing off on this MCA. Why are they trying to trick you on signing off on the MCA and promising a line of credit later? It's because a merchant cash advance pays the most commission to a broker. In fact, the commissions are staggering and the commissions are hidden. You as a consumer will never see the commission that your broker just made. But I will say 9 times out of 10, it's between 10 and 12%. So that means if you're getting a $100,000 MCA, your broker likely was paid between $10,000 and $12,000 out of that. So if you're working with a broker that's saying, hey, take this funding first, take this MCA, especially an MCA first, and then we'll get you a line of credit, they either don't know what they're talking about or they're lying. Either way, it's completely dangerous. If you were to do a combo MCA and line of credit, you technically need to do the line of credit first. Very few people know how to do this. And it's one of the few things that that as the brokerage, the loan broker brokerage, we can do for you in a responsible way. Next, number 3. Oh my gosh. Number 3 is a killer for me. And the reason being is my mentor taught me this. My mentor suggested that we all utilize this. And this is mainly done with cold calling. So any type of cold outreach, cold email, cold text, cold calls. And there are programs and robots and automation services that can do the phone calls and the text message for you. How many times have you guys gotten a phone call, but it didn't ring, but you have a voicemail? Those are called like ringless calls or something. I don't really totally remember what they're called, but it's a program that allows for people to reach out to thousands of people in a short period of time, right? So if all of a sudden out of the blue or in general, you get a phone call, a text, or an email saying, hey, I'm such and so reaching out about your application and you haven't applied, it is a marketing technique. It is a deceitful technique. The thought behind it is this: as a business owner, we're so busy doing all the things that we either forget or we don't recognize the name. So this slimy tactic is to trick you into thinking that you are working with this company putting everything down, getting on that call with that company and going, hey, I heard you have my application. And then from there, they will give you information. They will answer any of your questions. But the ultimate goal is, yeah, we have your application, but we need you to fill out an application. Make it make sense. So when you hear a broker or any type of communication saying, hey, we're reaching out about your application and you haven't applied, this is a deceitful marketing tactic. Now, your question may be, how the heck did they get my information, Ashley? How do they have access to my information? Let me give you a laundry list of how they have access to your information. Number one, if you have an LLC or an EIN, that information is public to a degree. If you have a virtual address or if you have a website that you registered and you didn't hide the information, you have that. You also have UCC filings. If you don't know what a UCC filing is, go ahead, jump to Google, type in UCC filing. That is also a public record. So when you get certain funding out or work with certain lenders, they're going to put a UCC filing on you. That is public record. Anytime you register your business for certain things, you're also on social media. You're also promoting your business at all times. So there's many different ways that companies can get your information for free or for very low cost. Also, if you did anything with the EIDL or the PPP, all of that is public records. So what these companies are doing is they're buying or they're downloading these free lists and they're reaching out saying these things to you. And guess what? It may not work 100% of the time, but it works 2 or 3% of the time, and it gets people's applications. We have had in the past, I remember one particularly, we had a client we were working with get poached. We call it poaching. Get poached by a fake text message. She got on the call with them. The person was extremely rude. She thought it was our company. They ended up hard pulling her credit and then telling her she didn't qualify for anything. She ended up reaching out to me, cussing me and my company out for behaving the way we did. I was very confused. I had to reach out. I had to ask for screenshots. And eventually I found out she was poached by using one of these tactics. Next, number 4, MCA is a loan that reports to business credit. I cannot even believe this is something that's being said or spread or preached, because in the contract, literally in a merchant cash advance contract, it says this is not a loan. It says this is not a loan. So first and foremost, if you're working with any broker that calls a merchant cash advance a loan, they're either, again, an amateur and don't know what they're doing, or they're lying. And again, both of those are very dangerous for you as the consumer. Next, merchant cash advances do not report to business credit. It does not. It has nothing to do with business credit. It won't grow your business credit. If you're working with a broker saying this, they are completely and outright lying to you. In the name, merchant cash advance, it's an advance. Merchant cash advances are advances on future sales. They cannot be called a loan. They cannot be referred to as a loan. And no part of the process when you're working with a client are you able to call it a loan. It says all that in the contract. So again, you're either working with an amateur or you're working with someone that should not be trusted. Next, what's number 5? This is a big deal. You will not be personally liable if you default. So there is a widespread over the last few years, all this talk about business credit and how you can use it and how it separates. We're talking about piercing the corporate veil, right? We're talking about separating the business and our personal, so we're not liable, so we can get all these benefits, blah, blah, blah. Most of what you're being taught is complete BS. It simply is. When somebody comes to you, when a broker comes to you, especially if it's a merchant cash advance, we see this often in merchant cash advances. Hey, if you default, you won't be personally liable. This is incorrect. Number 1, a merchant cash advance is a personal guarantee. You will be signing off. Next, I have had people, I have a very infamous story about a business owner who spent $10,000 to be mentored on consumer law. If you don't know what consumer law is, go ahead and look it up on the Google. And so the basis of consumer law is there are all these laws that can, when used properly or when you are aware of it, it can remove yourself the liability and the responsibility of paying on debts. You'll see people saying that you can get your down payment back on your car, or if you get a loan out, you can send certain letters and you don't have to pay it back. So the fake guru promise is that, hey, you can get a bunch of loans or advances out, and then you can file a few pieces of paperwork, and then you actually don't have to pay it back. So you're getting free money. They spelt fraud wrong. Clearly, it's not free money, it's fraud. But the consumer law people just preach it until their final breath. I have yet to see one do it. So we had this lady come to us through a referral partner, and she had paid $10,000 to learn consumer law. She had taken out 3 merchant cash advances, and she was told that if she sent these letters in, that she would no longer be liable to make the payments. Pretty much removing the contract, exiting the contract, and now she just has this money, right? So she paid $10,000 to the consumer law guru. They sent out the letters, and guess what? It didn't work. And because she wasn't paying on these merchant cash advances, 3 of them went into default. $10,000 for consumer law, paid $10,000 to learn a method that does not work. Okay. And then from there, she owed 50 something $1,000 because now she's in default and now these companies are coming after her. So then she spends another, I believe, $10,000 or $20,000 to try to get out of that. Long story short, the woman has paid out over $100,000 in gurus and owes 50 something to her bank, nearly 20K to Verizon. You will be personally liable, even if you didn't personally guarantee. There are certain things in the contract, the fine print, that will say, hey, if the lender cannot get back what they lost from you business-wise, they will look at your personal assets. They will look at your personal bank account. They will look at your house. So if you're working with a broker that is saying, hey, you are not personally liable on a default, again, they are an amateur or a liar, and both are dangerous. Let's go ahead to number 6. This is one of my favorites. Your credit score doesn't matter. You will see this on social media. You will see lenders promoting this, and it irks my nerves. So what's the real truth behind your credit score doesn't matter? If you're seeing the advertisement, your credit score doesn't matter, we're talking about 2 different concepts of lending. The first concept would be a merchant cash advance or any type of advance that they focus more on your revenue rather than your credit. And the other one would be any type of like in-house financing where you'd have like a payment plan where they may run a soft pull on your credit or not at all, but it's mainly based on their personal income going in and out. Think of like Afterpay as an example, like your credit score doesn't matter. So if you see a lender promoting your credit score doesn't matter, there are 2 things to keep in mind. Number 1, they're promoting merchant cash advances. So if you see your credit score doesn't matter, it is likely a merchant cash advance that is being promoted. Next, why are they able to say that? Well, a lot of merchant cash advance lenders will lend to people with credit scores as low as 400. And so when you look at the fact that you can go as low as that and still get an approval, the majority of people have a credit score over 400. I don't think it's right or justifiable to promote like this. So you will never see the lone wolf promote these things. We always let our customers know that your credit score will be a factor. Is it the first factor? Is it the main factor? Not in all programs like the Merchant Cash Advance program, but your credit score will matter. If you want really good rates, if you want single-digit rates, you need to have the best of the best credit. If you want monthly payment terms, you need to have good and great credit. If you have bad credit, you will be stuck in the cycle of declines, low approvals, or high interest approvals like the MCAs. Next, number 7, if someone is saying we can guarantee funding in 90 days, first of all, that word guarantee scares the living crap out of me. A lot of us don't realize that the FTC and the SCC, they provide rules and regulations of how every single type of business needs to be run. There are payment processing laws and rules when it comes to collecting payments and promises. There are so many things, so many rules and concepts around promises and guarantees. Over the last few years, so many fake gurus are talking about all this guaranteed funding, when really, if you don't have a money back guarantee, you don't have a guarantee at all. People are getting sued, people are getting shut down, and people are facing real jail time as well as insane fines because they want to go around promising and guaranteeing things without anything. If you're working with a customer, if you're working with a broker or a company where they have a contract, and inside the contract it says, listen, we guarantee to do this or you get your money back, they did it right. That's the way you do a guarantee. But if they're like, we guarantee funding in 90 days, check out all these receipts, that's not a real guarantee, and they're running an illegal offer. It's very, very dangerous. And chances are, if they're doing that, you are wasting your money. You're going to waste your money. We also see this oftentimes in business credit. The whole, hey, we can get you 150K in 90 days, business credit only, no personal score needed. That is also deceptive. That 150K isn't going to be loans or lines of credit. It's going to be vendor lines. It's going to be corporate cards, and it's definitely not going to be 150K. It'll probably be like 15K. But unfortunately, when you see that 150K in 90 days, you hand out a few $1,000s for that pipe dream. And then when 90 days comes and you have maybe $7,000 in funding, reality hits, and you're going to realize, I wish I had that money back to utilize in a better way. So now let's wrap it up with number 8. Your offer expires in 24 to 48 hours. Now, most of the time, a broker will give you a little bit more time, but I know of some really, really aggressive brokers. And those aggressive brokers, they're like the slimy car salesman. Most of them are from New York. They got a Long Island accent. It's funny, but it's true. And if you've worked with enough, you should be laughing along with me because it's hilarious how it's kind of all the same. You'll notice if you explore your options long enough that most MCA companies are in New York and Florida for a reason. But I also won't get into that on this video. But if you are working with a broker and they say your offer expires in 24 to 48 hours, it's simply just not true. They're trying to get you to sign off, and they want to get you to sign off quickly. Why do they want to do that? Because every moment that a contract or an offer isn't accepted, it pretty much is like a percentage point on the likelihood of you closing. So if it's been there for a few days, you're probably not going to close. But if you can get them to sign off right away, the likelihood of it closing and you making a sale is high. So super aggressive brokers will act like your offer expires in 24 to 48 hours. The truth is, most offers, when it comes to advances or term loans, they're good for 30 days. Now, lines of credit, sometimes they're only good for about 2 weeks, the offer. So there are times when the offer can expire in a shorter time. But if you're working with a broker and they're saying, hey, your offer expires in 24 to 48 hours, that's their own personal decision. That means they don't want to deal with you in 24 to 48 hours if you haven't made that decision yet. So keep that in mind. There are no offers that expire that quickly. That is completely a marketing tactic to get you to get the funding. So listen, I hope you enjoyed this video. We went over the 8 myths surrounding business credit. There are so many other concepts and things that we could really figure out. I'm sorry, I said business credit. I mean brokering. Business credit will be the next video, but there's so many layers to these slimy brokers. And again, some of them are amateurs. So some of them are unknowingly doing these things. They were taught that. If they were taught that and it was never clarified that that's not the reality, they believe it, right? So it's possible that you have some genuine brokers out there going around doing things that they don't realize are wrong. Again, if you're working with a broker that are utilizing these tactics, I would not trust them personally. Again, like I said, my mentor taught me these. I never used these tactics. There were several other tactics that didn't align with my core values, and it was one of the many reasons why I formed the Lone Wolf. So you as a customer can come to a company and not worry about being misled or deceived for a quick buck. Our goal, our dedication, the reason why we don't charge upfront fees, the reason why we don't charge for consulting is because we want to work hard to get you the best. Because if we don't get you the best, you're not going to accept any offers. You're not going to give us the time of day. So we don't have to tell you offers expire in 24 to 48 hours. What we do is we offer the best offers available to you on the market. Our experts work with you. They communicate. They answer your questions. They're not bothered. So it really, this video was made so you guys could have the understanding and the knowledge to make great choices, to identify when you are being mistreated, misused, or deceived, and to give you the power to make the best choices for you. Like I said, if you're looking for startup or financing options, you want to work with an expert, you have questions, maybe you have been done wrong in the past, we would love to work with you. Please go ahead and like and subscribe. You can email us or you can visit us on our website. Check out our other videos. They're also about debunking myths, providing helpful legal hacks and methods to help you grow. Thank you and have a great day.